Hey guys, it's Andrew Keen from KeenOnTheMarket.com. This is your unusual option activity for February 8th, 2012. We had some interesting paper today. Yesterday we were a little bit slow, and today I saw a lot of unusual option activity that I tried to get into. Some of them I got into, some of them I didn't. What happens is when a customer makes a trade, it's a public order, and we have a proprietary system that we track, and it shows and streams about 10,000 trades in a day. I try to find the best trades. I trade about 5 to 10 of them on a daily basis. Some of them I inter-day trade, some of my positions on. I have positions currently in about 40 to 50 stocks. So this is one that we saw today in LogMen. A customer came when the stock was trading 41.05, so basically on the open. Customer came and bought the Feb 40 puts for 120. I didn't get flagged to as a unusual option activity until they traded about 180, and the stock was trading right around 40.40. I tried to buy March 40 puts. I did not get them. The hardest part of trading is knowing when to get in and when to get out. I did not want to buy the top of volatility. I tried to buy some puts. I was going to buy a little stock against it, and these things absolutely exploded. 215 times usual volume. Certain stocks have wider markets. Some stocks have tighter markets. This stock has very wide markets in the options. So I could not get in this trade. It's not like they were 10 cents wide. These markets were about 40 cents wide. So stock sold off all the way down 30.20. These puts that they bought for 120 traded up to 285. It's just 215 times usual volume. We saw something similar in Sonic. They have earnings next week. I didn't get on the trade. Diamond Foods. They came out with an announcement after the bell, and they said basically the stocks went out of business. So they're going to have to change all their earnings, and the stock got hammered down to $21. Customer bought the March 35.30 put spread for $2.20, 2.7 times usual volume. And after hours, it traded down to 21. So this put spread they bought for $2.20 is going to go to $5. So that's a good profit for them. I did not trade that one as well. RGC, this one I did trade. Regal Entertainment. Like I said, some markets are tighter, some are wider. This one has a little bit of tighter markets. It's easier to get into. The stock is trading 13.02. Customer bought 3,300, the Feb 12.5 calls for 65 cents, 14 times usual volume. I bought some March 12.5 puts, and I bought stock. I bought extra stock. When you convert this out, it's puts and calls. So I bought some calls and I bought some puts just in case the stock corrects. They do have earnings next week. The volatility is very, very cheap. It could correct. I make more money to the upside, but I also make money to the downside. I bought straddles with more calls. Royal Caribbean, when the stock was trading 31.5, I see a lot of activity in the stock. I don't ever want to play it. I have traded it in the past. It's a very difficult stock to trade. Stock was trading 31.5. Customer sold June 36 calls for 130, 4 times usual volume. I'm not sure if this was against a stock position. When they sell calls, you never know if they have a stock position on or not. So they could have been just selling these calls against stock. The stock has rallied up since this $20 level, or they just want to get short. I did not play that one. GGC, another one. This comes across the tape a lot too. Georgia Golf Corporation. Customer bought 3,400, the March 32.5, 27.5, 1x2 put spreads for 80 cents. Basically, if GGC, his break-even point on these is going to be way lower down here. And he makes the most money at 27.5. The spread we were at $5, and he paid 80 cents for. 5 times usual volume. If you want to go to KeenOnTheMarket.com, we have the unusual option activity report. We also added some new features today. We have top increases of volatility up and down. We also have the richest at-the-money vol versus 30-day historical vol, and the cheapest at-the-money vol versus 30-day historical vol. So these are 2 features we added. If you like them, tweet me. If you don't like them, then tweet me too, and then we can put in some other things. We thought this was something to be interesting. Sometimes, it's good to trade rich volatility versus historical. Sometimes they're deal stocks like ILMN, so the volatility is cheap just because it's a takeover stock. This is Andrew Keen from KeenOnTheMarket.com. Have a great night, and get your unusual option activity report on KeenOnTheMarket.com.